Hi. Okay, so chapter 6, 12 chapters in the book. We're halfway there. So chapter 6 is going to talk about two things: internal controls, which stemmed from Sarbanes-Oxley issues, and accounting for cash. Now, it's important to remember that you have an upcoming assignment to write an essay on the 9 internal controls. So make sure you understand them all. So what are internal controls? Let's talk a definition first. The policies and procedures used to provide reasonable assurance that the enterprise will be accomplished, or the objectives of an enterprise will be accomplished, and they're broken into two categories. Accounting controls, which are designed to safeguard the company assets and ensure reliable accounting records, and two, administrative controls that are concerned with evaluating performance and assessing the degree of compliance with company policies and public laws. So internal controls are really a way for a company to make sure that, number one, they are producing the most accurate financial statements for investors. And again, this was an issue that led into Sarbanes-Oxley, the fact that companies were falsifying their financial statements. They weren't following GAAP, the whole 9 yards. Administrative controls, on the other hand, making sure that the company is following the rules and regulations of their particular industry, of the federal government, state government. So making sure that they're being honest and having integrity. And at this point, I'll remind you, we've talked about this before. These kinds of issues, they start at the top, because if the executives aren't following these rules and making sure that this happens, it's not going to happen underneath. All right, so what are the features of internal controls? Why do companies bother even paying attention to them? Well, control environment, the integrity and ethical values of the company, including its code of conduct and other actions that set the tone of the organization. This is where the company gets its culture, from the control of the environment and the ethics of the senior executives and the values of the companies. And if you go out and look at all major corporations, they all have ethical values stated on their page. Risk assessment. So this is where management decides, where are there possible problems? Where are there possible risks in not preparing financial statements that are honest and accurate? And then they have to, of course, address those risks. Number 3, control activities. These are the things that we're going to talk about, the internal controls, including things like segregation of duties, information processing controls, certainly an issue in this day and age. Information and communication, so internal and external reporting, an assessment of the technology environment, and assessment of the accounting and the management of the company. And number 5, monitoring. And of course, we always think companies typically forget about this part. This is where you go back over time and you take a look at how things are working. Are the systems that we put into place actually doing what we designed them to do? And if not, making adjustments. All right, our first internal control is called separation of duties. It has to do with the work of one employee being a check on another. Whenever possible, the functions of authorization, recording, and custody of assets should be performed by separate individuals. A good example of this would be to have the accounts payable person not be the same person who inputs vendor information, processes invoices, and processes checks. Because if you have one person doing all 3 of those functions, then there's a possibility for fraud. Quality of employees. A business is only as good as the people it employs. Employees should be properly trained. Job rotation and cross-training. Big issue. Big issue for me was as a controller. I made it my business to make sure that the people who are working in my accounting department knew how to do everybody else's job. So everybody sat in everybody else's position at one point or another. It accomplishes two things. One, you have somebody else sitting there doing what that person did and seeing how they were doing it. And number two, it gives you the opportunity to have somebody take over a position if somebody gets sick. I was interviewing for a CFO position once several years ago for an architectural firm in Long Beach. And I was sitting with the vice president of operations, and he was telling me a story about a time when the controller was asked for a report. And the controller said to the CFO, that the report couldn't be produced right away because the person who was responsible for that was on vacation and she wouldn't be back for a week. So when she got back, the first thing she would be doing would be producing that report. Obviously, that doesn't work. So everybody's got to get cross-trained. So you have plenty of people to do all the work that needs to be done, no matter who shows up. This is a big one too. Relieve boredom. Periodically, if people are doing different jobs, it makes them more interested in working. Bonded employees. Employers should screen job applicants using interviews, background checks, and recommendations. Employees in positions of trust should be bonded. Again, as the controller of the company, typically I was also the administrator of the 401k plan. So I was overseeing the money that was being invested by the employees into their retirement fund. So the company needed to protect themselves in the event that I tried to steal money. Because if I stole money from the plan, they had to put it back. And that's what a fidelity bond is about. A fidelity bond is insurance that protects the company if an employee is dishonest in some way. Required absences. Have you ever worked at a job where there was somebody who never took a sick day, never took a vacation day, was never gone, always there? Well, an employee may be able to cover up fraudulent activities if they're always at work. All employees should be required to take regular vacations, and their duties should be rotated periodically. This goes back to that cross-training idea. I had a person that I had to fire once. She was an accounts payable person. And when I had somebody temporarily cover that position, the person came up to me with a bunch of invoices that they found in her desk. Apparently, she decided she didn't feel like working, so she would leave invoices in her desk, and then they didn't get paid. And I got calls from the vendors saying, "Where's our check?" So it's important to send people away. I also thought it was important for employees to take vacations to recharge their batteries, right? We get spring break, we get summer break. We get a break so that we can take some time, get away from work, and do something fun and relax. Procedures manuals. I've written a lot of them. Appropriate accounting procedures should be documented in a procedures manual. So for every job that I had, I used to write a document and I called it hit by bus because it assumed that I was hit by a bus and I couldn't make it to work and I was going to be gone for a while. So what I did in that document was I put down on paper, on the computer, I wrote down what my basic responsibilities were on a monthly basis. So how did I handle accounts payable? How did I handle the bank reconciliation? How did I manage collections? All these sorts of responsibilities that have to be handled by the controller during the month, I wrote down. So if someone had to take my place, they could pull this document out and it would give them a basic roadmap as to what they had to accomplish for the month. I also had all of my people do the same thing. So we had a manual for accounts receivable, accounts payable, payroll. The manual should be routinely updated. Periodic reviews should be conducted to ensure that employees are following the procedures outlined in the manual. That was my job, to make sure that the procedures were being followed and that they were updated when need be. Businesses should prepare an authority manual that establishes a definite chain of command. Specific authority applies to applies to positions. For example, as the controller, I was responsible for signing checks. So I had the specific authorization, being the controller, to sign the checks every week. General authority runs differently. General authority applies across the company. So it might be, for instance, how people are allowed to make reservations for planes to take flights when they have to fly somewhere. I had a policy that within within a 5-hour flight, they had a flight coach. Over 5 hours, they could fly business class. It typically handled the difference between flying within the United States and flying outside the United States. Pre-numbered documents. This goes to something interesting. Pre-numbered forms are used for all important documents such as checks, purchase orders, receiving reports, and so forth. The use of pre-numbered forms helps keep track of the forms during a period. Think about checks. Now, we all have checking accounts. I know nobody uses checks anymore. If you do, you're like me. Sometimes you do have to sign a check. For instance, the government typically wants checks unless they let you pay online. The point being, checks have numbers. So in a business, if the accounts payable person goes back to the box, usually you have a box of checks with maybe 500 checks in a box. So you go back and you see that the next check is check number 1026. If that same accounts payable person had gone online and seen that the last check number that was recorded on the books was check number 1024, what does that say? What it says is that check number 1025 is missing. Now, if the checks weren't pre-numbered, we wouldn't know that. So pre-numbering documents is very important. Physical control. To limit losses, companies should establish adequate physical control over valuable assets. A physical inventory should be taken at least annually by someone other than the person who has control over the inventory. We talked about this in chapter 4. Remember, we talked about the warehouse manager, and the warehouse manager was responsible for taking the year-end inventory and reporting the ending value of the inventory, and there were issues with fraud there as well. Serial numbers should be placed on all valuable assets to assist in a physical count. In 1993, I added to the computers that were in the architectural office I was working for, I added barcodes so that I could scan the barcodes at the end of the year when doing an inventory and make sure that all of the computers and the printers that we had at the beginning of the year were still on the premises at the end of the year. Performance evaluation. Internal controls should include independent verification of employee performance. A physical inventory should be taken again. Physical inventory should be taken. Auditors should evaluate the effectiveness of the control system as well as verify the accuracy of the accounting records. And that's really what auditors do. Now, there are limitations to every rule. And the limitations to internal controls is they can be circumvented if there's collusion amongst employees. So if 2 or more employees decide they're going to steal from the company, it gives them a lot more latitude to get away with it because embezzlement can be covered by each other. So no system can prevent all fraud. Good internal controls minimize fraud and increase the likelihood of early detection. And that's the point of controls. All right, so that takes us to the end of this part of chapter 6. I will see you in part 2.